Rob Leith is the Chief Executive Corporate and Investment Banking International at Standard Bank. Rob, you guys have got a big exposure to the Chinese now, being, in fact, your biggest single shareholder. What news are you getting from China?
Alex, I think certainly what we felt back end of last year, second half and into the last quarter, the Chinese certainly slowed up the interest in moving outside China. Certainly the banks and the financial sector, we had the impression, were told by the government to hold their horses in. They didn't want to see further international investment. And I don't think, quite beyond investing in the financial sector, they weren't looking particularly for loan assets, those sorts of things, the banks. Interestingly, late last year, around November time, we did get a sense from the Chinese that come January they would start looking again. And it seems to be that China is the one source of dollar liquidity at the moment, looking for dollar assets. And by that I mean loan, helping support Chinese companies move abroad, lending them money, having dollars available, which is not that common in the global financial market at the moment.
It'll be interesting to see how that all pans out. But the reason we asked you to come to the studio, and thanks for the insights on China, is to look at the other one of the BRICS, and this is Russia, where today you hit the headline of the second section of the Financial Times with your acquisition of a third stake in a Russian equivalent of Investec Bank. $200 million, is that money you actually going to be putting in addition to your operation in Russia?
Yes, Alex. We've been in Russia, I guess, for many years in various shapes and forms. Originally only as a representative office. We got a banking license there in 2003. And Russia is, for us, a strategic country. We have always made a point that we are an emerging market bank. We have aspirations in key emerging market countries. Russia is a resource-oriented country, very much akin to the sorts of things we like to do. And, of course, it's having a very tough time at the moment.
Stock market down 70% this year.
Yeah, the stock market.
Or rather, not this year, but in the last 12 months.
Yeah, it's had one of the biggest canings in the world, I think. It was very, very frothy. It's a small market. It's the number of liquid stocks on the market is very limited, and it's got a limited number of people really interested in it. And I think what's happened is as the foreigners have struggled, or the West has struggled, it's one of the markets they've got out of, and it's not very liquid as a result. So, it's been one-way traffic in terms of the foreigners selling and not a lot of capacity locally to buy.
It's a tough place to do business, though.
It's a very tough environment. There's no doubt about that. And, that's one of the reasons through all our now years of experience there that for us, if we feel if we want to get a bit bigger in Russia, and we do, we think it's an important country, we have to have a Russian partner.
Rob, Warren Buffett 3 years ago was asked, would he invest in Russia? And he said he had. They did, Berkshire Hathaway, and he then had to leave. They had to airlift their people out there, leave all their equipment behind, because somebody in some political position wanted to get hold of their assets. He said he wouldn't touch it with a barge pole. And yet Standard Bank is going into a country where more than 300 journalists have been assassinated, including one, a young journalist just last month was assassinated by a masked gunman. It's a place that has got so much negative publicity and so many negatives to it. Even Buffett says he won't go in there. What is it that makes it worth the risk?
I think let's first of all put the risk in proportion, Alex. I mean, we're talking about a total Standard Bank investment of the order of $300 million when you combine our bank together with the new money that we are putting in. In Standard Bank terms, that's something between 2 and 3% of our market cap. So I think the first point to make is that we think it's a proportional investment. It's something that is not a huge amount. It gives us a very interesting position with a leading player in Russia, which is potentially a big market. But undoubtedly, as you say, Alex, a tough environment, and for many of those reasons you're talking about, one, that we believe we need to operate there with a partner rather than alone.
Bill Browder from Renaissance Capital actually was kicked out of the country. Renaissance Capital is the big competitor to the company you've just bought, Troika Dialogue. Again, shareholders might, is it billions of rands that you're putting in, over 3 billion rand. Shareholders might also be asking some interesting questions of you.
Yeah, and clearly we've been talking to analysts and shareholders, and I think the likes of them today. I think those who are familiar with Russia understand it. I think we believe we are finding the quality asset of Russia. We've known Troika for many years. We've known Renaissance for some years. They've got they're always compared. They're always seen as the two domestic investment banks. I think a very important difference. Troika is Russian-owned. Ultimately, although Renaissance is a domestic bank, the major shareholders are not Russian. And we think they've had very different operating styles. And, but I think it's common knowledge at the time, Renaissance was looking for a shareholder, they had real trouble. That's not the case with Troika at all.
The culture, the business culture of a country has to be based on integrity, honesty, and so on. And we certainly, the perception is that that's lacking in Russia.
It's definitely lacking. Like everything, you can't say it's totally lacking everywhere. You've got to know and pick your spots to operate with the people you know. And again, that's one of the reasons for us having an insider. I don't believe, although we have been in Russia for many years, I don't believe that the outsiders will ever really have that inner knowledge that a true, local partner of real integrity can bring us.
After this, how much capital, free capital, do you still have in the international operations?
Alex, you saw our results yesterday. The group operates at a relatively decent capital base. As you know, I think last time I was talking to you here was just after ICBC. And, we operate at relatively high capital levels. But, I don't think we would want the world thinking we now are off there to splash money around. I think what Wayne said earlier was absolutely right. People ask you all the time, is this the right time? Russia's in crisis, etc. It's that very crisis that brings the opportunity. Someone like Troika, we've known.
But how much money have you still got ready? How much ammo have you got ready?
We'd never disclose the
loose. Would you do another deal like this easily in another country, say a Turkey or an Argentina?
We've certainly got the capacity to do it. Would we do it? And financial capacity to do it. Are we looking at something else right now? No. We've certainly isolated the countries and selected the countries that we most.
So this was a gem that you were after.
We had, I think it's a matter of sort of fairly common knowledge. We had pretty serious talks with them 18 months ago. There's a bit of a mutual admiration between us. We know each other pretty well. They're an investment bank. Your comparison to Investec is not altogether incorrect. I think it's pretty close on. We think the combination of a corporate bank together with an Investec type investment banking asset management model is a much stronger financial institution going forward.
Fascinating. Rob Leith is Chief Executive Corporate Investment Banking International at Standard Bank. Now they've got some big footprints into major emerging markets. Be interesting to see how that one pans out into the future. Certainly Standard Bank's been there long enough to know exactly what it is getting itself into.